In this video, I'm going to talk about the Fed's meeting on Wednesday and what has happened in the last 48 hours since they announced that they'll be raising rates by 0.25%. So if you watch the meeting, Jerome Powell announced they're raising rates to 0.25%. This is likely the last interest rate raise this year before a pause and possible reversal. Now, what has happened? Actually, a lot. So if you watched the video, you saw Jerome Powell talk about credit conditions naturally being like a rate increase. So the reason they're not going to increase rates anymore is because what's happening in the banking system and the financial industry, lending is going to be tightened like crazy. So what that means is that will naturally act as a rate increase, and that will slow the economy down and bring inflation down. Now, here's something really, really interesting leading up. So as you all know, the Fed created a discount window. A discount window, basically a pool of money that these banks can take a loan from. If you go to deposit, if there's a bank run at any of these banks, then they can dip in to this pool of money, take out a loan, which will have to be repaid in 1 year. Leading up to Wednesday night, we had 117 billion in loans being taken out each night from these banks. Okay, so let that sink in for a minute. The Fed is saying, or Janet Yellen specifically, we're not going to bail out these banks. But let me ask you something. If you're a bank and you're exposed to a bank run and hundreds of millions of dollars are being withdrawn from your bank, so you're losing that money, and then you're going to go and dip in to this pool of money that the Fed has created and take out $100 million loan. So now you lost $100 million on one side, and now you got $100 million loan that you need to pay back on the other side. I just don't see how the banks are going to be able to pay this money back. It is technically a loan, so it has to be paid back. But I just don't see how a failing bank like a SVB, how would they pay this money back? It doesn't make any sense to me. So what else has happened today? Huge news. Deutsche Bank, the largest lender in Germany, on the brink of collapse. How many more banks are gonna collapse in the coming days and weeks? I mean, we're talking about the biggest lender in Germany. So the reason this is going to be devastating is because this money that's being lent to the banks, I fear, is not going to be repaid. How is a failing bank going to repay these loans? And we're going to head into another cycle of inflation, possible hyperinflation. And switching gears, mortgage interest rates have come down actually because the Fed, even though the Fed announced a rate increase, what a lot of people don't understand is the markets are forward looking, especially with mortgages. So the mortgage industry foresees this as the last rate increase. So they foresee rates coming down. So mortgage rates dropped by 0.75%, 75 basis points. So rates have come down significantly. If they come down a little bit lower, you're looking at mortgage rates in the low 6%, possibly 5%. So just a month or so ago, we were looking at 7%. Now you might get something in the high 5% range. So we haven't been in the 5% in a very long time. So encouraging news for the mortgage brokers, loan officers out there. One other thing to mention, I know a lot of people keep talking about housing crisis, prices dropping 20%, 30%. Again, as a real estate broker, mortgage broker, the most important thing is it depends on your area. It depends on pocket by pocket, city, county, state. Every pocket is different. So we just ended our 10-year run of year-over-year value increases. The longest history longest in history that housing has gone up year over year for 10 straight years. That's never happened before. So quite a rally. This month, February was the first month that values dropped year over year. And guess how much they dropped? 0.2%. Not 0.5%, not even 1%. Home values dropped 0.2%. That's a tiny figure when you can, and this information, these statistics are coming from the National Association of Realtors. So this is stuff you can count on. Just to give you a breakdown by region, the Northeast region, median home prices down 4.5%. Midwest, median home prices up 5%. In the South, 2.7% increase. In the West, down 5.6. So the West Coast and the Northeast down, South and Midwest up. Overall, 0.2% value decrease. Average median home value right now is about $363,000. Now, again, back to why this is devastating is if we enter a cycle of inflation like we did during the COVID pandemic, we saw home prices rise 20% per year. Now, obviously, if you're in real estate, I own real estate. Yes, it's great. My home value goes up. But how about the next generation? And how about all the people who don't own homes? Now, if you were on the verge of being able to own a home or buy a home, that dream is going to get wiped out. If we have another 20% year over year increase in home values, and that happens 2 years in a row, the median home price will go from $360,000 to $480,000. It'll be almost $500,000 to own a house in America. So it's going to take a lot of opportunities away. I would rather see consistent 2 to 3% increase in home values over time. I don't like these 20% jumps. It's not good for it's not good for the everyday person. It's not good for the average American folk. And I know a lot of analysts or some people who are talking about a housing crash are mentioning, well, I see house value, or not house values, but listings drop 100,000, 200,000. They're dropping and selling for hundreds of $1,000s less than asking. Well, there's a very simple answer to that. Some sellers are continuing to list their properties at unreasonable prices. So yes, of course, if your home is worth 2.5 million and you list it at 3 million, it's gonna sell for hundreds of thousands under asking. Of course, because you had an unrealistic value to start with. So that doesn't mean home values are going down. That just means there's some sellers that are still unrealistic about what their home is worth. Very simple. So please subscribe if you find value to this video. I'm going to keep following what's going on with the Fed, the banking crisis. And I'll see you guys on the next one.